For this mock exercise, we're going to take a look at Larson Corporation. Now, the two previous videos shows you the method that we did for process costing called the weighted average. And we also showed you the journal entries associated with what happens behind the scenes when we're transferring the goods from one department to the other. What are the journal entries? This is the same case fact as the other two videos, except we're going to use the FIFO method in this case. So let's go back to the actual question. So in this question, you'll see that Larson makes car seats, and each car seat passes through the assembly and the testing department. And this actually data is for the assembly department. The process costing at Larson has a single cost, direct cost driver called direct material, and indirect cost called conversion cost, and that's what these two are. Now, in some questions, you'll see there could be 3 different cost categories or 4. It doesn't matter whether we have 2 or 4 or 5. The process, the 5-step process in process costing is going to be the same. We're told that the direct material is added at the beginning of the process. And that's an important assumption. And in fact, you'll see some questions may not have this assumption. So you have to pay attention. Sometimes other questions will say the direct materials are added at the end of the process. So you'll know that, if you buy certain products, they would add the direct material, let's say special coating, once the product is complete. So that would be a good example of how direct materials could be added to the end of the process. Some questions you'll see that the direct materials added after you've achieved 50% of the process. So you'll see the different assumptions will lead to a different formulation, but the 5-step that I'm going to show you is exactly the same. Conversion costs are added evenly during the process, which means that if it's 60% complete, we're going to assume that 60% of the cost, conversion costs have been incurred, have been billed, have been added to the actual product. That's another important assumption. Now, this is the data that relates to the month of October. What you have is you have a beginning work in progress of 5,000. This is how much cost that we've incurred from prior period that now we need to consider for this period. These 5,000 units, we know that 60% of those have been converted. In other words, we've incurred 60% of those 5,000 units already. So this represents 60%. And 1,250,000 represents 100%. Because remember, the assumption here is that was added at the beginning of the process, which meant that last year's production, we would have incurred $1.25 million worth of material. Now, we know that we started at 20,000 units, which means that we have 25,000 units to account for. Now, of that 25,000 units, this is how many units were completed, in October. And by the way, that includes that 5,000 in there, right? So if you really think about it, we're going to split this out between 5,000 units that were completed. So part of that 5,000 that were completed came from work in progress October, and 17,500 must have been started and completed. So I just wanted to kind of highlight the thought process there. Like, that's going to be important. For FIFO, we have to keep these number of units and the costs associated with producing and completing or partially completing these units separately. Unlike the weighted average, where we actually going to add the cost and average out the cost from last period to this period. Now, think about it. Materials would have changed in prices, particularly if we buy the material from a foreign country. Foreign exchange would have happened, prices would have fluctuated, and the labor costs would have increased or decreased. So there's a whole bunch of different costs that could have impacted or change. And if we use the weighted average, we're just going to average those. But if we use the FIFO, we're going to keep those different costs from different periods separately. So this must come from the work in progress October 1st. I just want to highlight these two important points. Now, that means that if we have 25,000 to account for, 22,000 were finished, this must be the number of units that are still sitting in work in progress. And we are told that that was 70% of that as conversion costs have been incurred. So let's actually do this question. And then they're asking us to do it on a FIFO basis, but they're also asking us to make some comparison to why the costs are differed between weighted average and FIFO. And the weighted average was the previous video from this. Okay, so why don't we do the FIFO method here? And again, we're going to do the 5 steps that we talked about. So we're going to look at the flow of production. And we need to figure out the flow with respect to physical units. And this is really step 1. So we start with beginning work in progress. So beginning work in progress, we knew we had 5,000 units in there. And how many were started in the current period? 20,000. To give me 25,000 is number to account for. Now, we need to analyze this 25. And we need to analyze that these 25, we know that 22,500 were completed. So, completed and transferred to testing department. So we know that some of those were from WIP, work in progress, beginning of 5,000. And we know that this was how many were completed, started, and completed in the same period was 17,500. That's the 22,500 that we saw in the required, right? And we did that calculation already. Now, what was sitting in work in progress ending would have been the 2,500 units. So that gets us to the 25,000. So these two numbers always has to equal, right? That's step 1. Step 2 requires us to analyze the equivalent units. And we need to analyze it from a point of view of the direct material and conversion costs. We need to segregate because the different adds to the product occurs differently for each one of these, each of these categories of cost. Or step 2, sorry. Now, we know that the 5,000, how much of the material was added this period? The answer is none, because that would have been already incurred from previous period. How much of the direct materials or carrying conversion cost was added this period to complete that 5,000? Well, we know that this was only 60% complete, which means that 40% of the 5,000 would have been equivalent amount of units of conversion cost that we would have actually incurred this period. So let me write that down. Let me just show you the math here. So we got 5,000 times 100% minus 60%. And that gives us 2,000. Now, of the 17 all of that would have been incurred in equivalent units. The 2,500, because we started it and it's still not complete, we know all materials would have been incurred, but we're told that these are only 70% complete for conversion. So that's what we're going to show. It's going to be 2,500 times 70%. And that gives us 17,050, 1750. So the total equivalent units is 20,000 for direct materials and 21,250 for conversion cost. That's step 2. So let's do step 3. Step 3 requires us to determine the cost, the total cost to account for. So we know that the beginning, work in progress, beginning, so this is the total cost. We know that the beginning, so let me just do this again. We know that the beginning had direct materials, was given to us 1,250,000. Conversion cost of 402,750. The total is 1,652,000. That would have been the balance in the T account. How much was added? Cost added in October. Well, that was given to us too, right? That was given to us 4.5 million and 2,337,500. So total cost, and remember, this is the cost. This is the number I must be able to reconcile at the end. I have to make sure that the total of what I transferred out to the testing and what's remaining in work in progress should be the sum of these, sum to equal to 8,490,000. Now, this would have had its own unit cost because this would have been part of the calculation of last month's cost per equivalent unit. What we're trying to figure out is what is the cost of equivalent unit for the current period. So cost, let me just, of equivalent unit for the current period is really what I'm looking for. And this is step 4. And really what I want is I only want the cost incurred, right? Cost added in October, which is really this number here. So this number is what I'm after. Now, I'm going to divide this by the equivalent units, right, in step 2. So this is from step 2. To give me the equivalent cost per equivalent units of 225. So this is the cost of equivalent units of the goods that have actually were incurred this period. Now I'm ready to do step 5. So you can see that the FIFO was a bit more involved. Step 5, we need to assign the cost. Okay, so so we know that number of goods completed was 22,500, right? How much of that came from work in progress beginning? We know there was 5,000 of those units. Okay, so those 5,000 units, okay, we know that they incurred 0 direct material, but we have 2,000 equivalent units. So we know that for direct material and conversion cost, this 5,000 was 1,250,000 plus 0 because we had 0 equivalent number of equivalent units for direct material for that 5,000. Remember we did that analysis? Right, that's your direct material. Plus the conversion cost, we looked at step 3 and we incurred 402,750 from prior period. Plus, we're going to take the per unit cost of $110 times 2,000 equivalent units. So the 110 came from here per unit. And we were told there's 2,000 equivalent units from beginning inventory. And that gives us 1,652,750 plus 220. So this 5,000 units costs us 1,872,750. That's now going to be transferred to the testing department. Now, we know that these were started and completed, and there were 17,500 units. Okay, how did I get that? It would have been this number here. And we know that these are the equivalent units for direct material and direct labor. So we're just going to take 225 times 17,500 plus 110 times 17,500. That gives us 5,862,500. So the amount of total cost that we're going to transfer, total cost transfer to testing department is going to be the sum of these two, which is 7,735,250. Now, what should be sitting in work in progress ending? We know there was 2,500 units. And then we know that those 2,500 units, the average cost per equivalent unit is $225. This came from step 4. Oh, sorry, it's not 2,500, right? Hold on, It's 2,500 and 1,750. Sorry, it's 1,750 here. So it's easy to make a mistake. So it's very, very important that you understand the flow of these goods. So step 1 and step 2 are actually critical steps, because that allows you to understand what is the equivalent units that were incurred, that were used up or consumed in the current period, to be able to get a good understanding of how we get to step 5. You'll also notice that this number is equal to this number in step 3. And it's also good to know that this number is the same as the weighted average method. And all we're doing is we're trying to figure out the allocation between what's sitting in work in progress that's now being transferred to testing and what's sitting in work in progress at the end. Now, part 2 of the question asks us to analyze the results, the difference between the two methods. So let me summarize the other method for you. So under the weighted average method versus the FIFO, so let's write down the FIFO. So you'll see that the cost transferred to testing, so these are all the completed. Under FIFO, we saw that was 7,735, 250. Under the weighted average, the one that we did in the previous video is 7,717, 500. So this FIFO is much higher, right? And the difference is 17,750. So FIFO is higher. Now that to me means that the cost of direct material per unit and the conversion cost must be lower in the month of October than it was for the month of September, prior months. Now how do I know that? Well, I'll show you that in a minute. The work in progress ending, we saw that this was 755, and this is 772, 750. We know that the total is 8490, cost to account for, and this is the same as well, isn't it? But the difference in ending inventory is exactly the difference in the cost transferred to testing. So you'll see that all we're doing is we're putting into finished goods, or in fact, if this was sold, so you could see that depending on which method we choose could actually affect what income we're disclosing in the current period. We know that overall the effect will be zero because it'll cancel out. Now, how do we explain these differences? Well, what was the per unit cost? So it's good to understand the per unit cost. So we know that the direct materials, okay, for the cost using the weighted average method, you'll see that that cost, the direct material, is $230 and $113. So total cost is $343. The cost for the FIFO method is $225 and $110. So you could see that the per unit cost under FIFO is much less. Okay, so that means that whatever we're costing out as part of working progress ending is going to be less because the per unit cost is less. And that's why the ending inventory under FIFO is lower than under weighted average. Right? That means that by virtue of virtue of the fact that we're recording less in ending inventory means that the amount that's transferred to the next department is going to be higher in FIFO. Now, if you look at also the beginning inventory and the ending inventory, you can see that the per unit cost for direct material. So we know from the question that this would have been incurred 100%, right? So 1,250,000 divided by 5,000 would have been, that would have been $250. Now what was the cost for the current period? It was $225. You can see that the cost is going down, right? So it's decreasing. Now what about conversion cost? We know that this conversion cost is $402,750. And the number of equivalent units was essentially 5,000 times 60%. That's 3,000 equivalent units. So if we're trying to calculate what the cost per conversion cost would be, it's $134.25. And what was the conversion cost that we calculated in step 3? It's $110. You can see that the conversion cost is also decreasing. So if you think about it from that perspective, if the conversion cost is decreasing and so is the direct material, then what's sitting in ending inventory should be less, because this would have included a higher, right, because we're calculating the average from last period. So it would have been the average of these two numbers when we're calculating the weighted average method. So that's how you explain it. So this is a great way for management to perhaps select which methodology to cost out process costing, which method they should choose, whether it should be FIFO or weighted average, depending on what income and balance sheet inventory they want to show. Okay? Thank you.